Ladies and gentlemen, welcome back to the channel. We have some massive Tesla stock news to go over. This could really be a game changer for Tesla in terms of Tesla's AI prospects and projects that are not being fully appreciated or really appreciated at all by the marketplace. This could be one of those pivotal moments, and we'll discuss that here in just a few moments. Ladies and gentlemen, we have a lot of news to get into, Tesla specifically, broader market related. We did have some surprising economic data as well, and honestly, it wasn't bad. And I think that's why you're getting the broader indexes that are moving higher, but it's a bit of a mixed bag out there. It's not just a great day across the board for everything. The breadth is kind of narrow today, and you are getting this push and pull throughout the day. And you can also see that with Tesla, considering the big news we got today, Tesla stock should be up a lot more than 0.1% like it is today. So we have a lot to get into here in this video. Hit that like button and subscribe to the channel if you have not done so already. Check out the link down below in the description of this video if you want to come join the trading community. Keep in mind, we are outperforming almost everyone on Wall Street this year. Portfolio's up like 90-some% this year. We're going out finding small cap AI stocks before everyone else does. But if you blindly listen to somebody else, you will lose all of your money. I'm not a financial advisor. I'm not a financial planner. And we have a good track record. But if you blindly follow somebody, you will lose all of your money. Do not be a jackass. With that said, let's get into today's episode. First and foremost, Tesla's Robotaxi app is now available to all iOS users in the US. You can now join the waitlist in the app. Tesla says Robotaxi access is expanding soon, with Android coming later. So here's the deal. Okay, San Francisco, as well as Austin, the two cities that Tesla has officially launched in, are invite only. Elon Musk said last month, about 30 days ago, that in September, these two cities would be going live to anyone. Okay? Did Wall Street pay attention to that? No. They don't quite get it. Okay? Well, now it's September, and presumably any moment, those services are going to go live. Now, Tesla has a big advantage versus Waymo. Number one, Tesla is a widely known and respected company. Like, if you know about Waymo, you know about Waymo, but go ask random people, like, odds are they're not going to know about Waymo, they're going to know about Tesla. I think that is an advantage for Tesla. You also have the geofenced area for Tesla that is like way bigger than Waymo's in San Francisco, in the Bay Area, as well as in Austin, Texas. So there's also that massive advantage that Tesla has. Now, also from a logical perspective, once the Robotaxi is available to everyone, that is actually like a quote unquote real product. Something that's invite only, that's only to an elective group of people. It's not really a product. It's more of like a testing field. So I actually think this is huge news. It does also suggest that we could be getting further expansions into different cities coming relatively soon. Now, Tesla says in the terms and conditions that, quote, if your ride is taking place without a safety driver present in the driver's seat, it is being conducted autonomously. The Tesla Robotaxi X account says safety monitors are only in the driver's seat for trips that involve highway driving as a self-imposed cautious step toward expanding to highways. Tesla's new car sales in Britain rose in August from last year, primarily driven by a growing EV market seen as overall UK auto sales declined. New Tesla car registrations in the UK grew 7.63% in the month, alongside a 15% jump in BEV sales. BYD has slashed its sales target for this year by as much as 16% to 4.6 million vehicles, as the Chinese EV maker faces its slowest annual growth in 5 years and other signs that its era of record-setting expansion could be drawing to a close. I actually made a video on this a while back. BYD is not the company you think it is, okay? It's not this Tesla competitor like you think it is from a financial perspective. Whereas Tesla has, 30 billion plus in cash. It is totally self-financed. BYD operates completely different. BYD has a lot of debt. They have very little cash compared to debt. They have like twice as much debt than cash. But they have a ton of debt. In essentially what they do is they take delivery of parts for their vehicles, different parts, and they basically say, we'll get back to you later. Or another way to put it is if BYD ordered, let's say, steering wheels from XYZ company, well, they're paying for the steering wheels they ordered like 3 orders ago. So they have basically like all of their inventory is like back ordered, right? Or trying to find the best way to understand, to put this so anyone can understand this. Essentially, they have a lot of short-term debt. Now, if you're the company that's supplying steering wheels for BYD, you're just going to give them what they ask for, right? And you're going to accept these delayed payments. It's like, buying something off the Apple store or something and then paying for it 3 months later, right? That's essentially what BYD is doing. They're taking delivery of things, of, products and parts, and then paying for them down the line. That only works as growth is accelerating. If the growth stops, then you stop ordering as much, and then you start to get behind on those back orders. It becomes very difficult to pay off what you took delivery of 3 months ago if you're just trying to keep your business operational. So BYD has been able to do this because they've been growing so fast. If that growth starts to stop, BYD could be in a problem quickly. I bring this up because it could be to Tesla's benefit. The marketplace might like it if BYD starts to struggle, or the marketplace may not like it because if BYD is struggling, then who's to say Tesla couldn't struggle, right? So it could go either way, but it's something we might want to start watching a little closer since BYD just cut their guidance. Lucid today announced the closing of a $300 million investment in the company by Uber. They say, quote, the strategic investment was made as part of the next generation premium global Robotaxi program announced in July. The Robotaxi, which will utilize Lucid's electric vehicle technology platform, is planned to be built at Lucid's manufacturing facility in Arizona and will operate exclusively on the Uber's ride-hailing platform. The funding supports the partnership between the two companies and contributes to development costs associated with the autonomous Robotaxi initiative. General Motors is cutting output at one of its main electric vehicle factories due to low demand. GM will stop production of the Cadillac Lyriq and Vistiq in Tennessee during the month of December. GM also plans to significantly cut production of those vehicles during the first 5 months of 2026 by temporarily laying off one of its 2 shifts of workers. The company will additionally shutter the plants for 1 week in October and in November. This is a stark contrast to Tesla, where Tesla is seeing massive demand. GM is not. Porsche has announced that its 2026 Cayenne EV will be able to wirelessly charge in your home. It can charge at speeds up to 11 kilowatts. Now, Tesla actually bought a company a year ago with this same technology for wireless charging. So, just want to point that out there, that if Porsche is trying to do this, well, maybe Tesla tries to do this as well. Honestly, I don't know how this takes off if you can only charge at 11 kilowatts. Like, that is very slow versus like a Tesla supercharger at 250 kilowatts. It would take a while to get a full battery on that. Look at that. Tesla's Robotaxi app is now ranked the #1 free app in the travel category on Apple's App Store. And Elon Musk is so locked in on Tesla. It's great to see. Elon Musk a little while ago says, please reply to this post with any difficulties you may have had in trying to buy a Tesla. Our goal is for the purchase and delivery experience to be fast and simple with accurate answers to your questions. The key test is that you would recommend it to a friend. Taxi app is now the 6th most popular free app in Apple's App Store. So yeah, it's very popular. Sawyer Merritt says he's been getting a lot of messages from people who downloaded Tesla's new Robotaxi app last night and already have access to the company's Robotaxi and ride-hailing services. Now, the First Lady, Melania Trump, is hosting an AI event tomorrow in the newly renovated Rose Garden. In attendance will be Sam Altman, Mark Zuckerberg, Tim Cook, Satya Nadella, Sundar Pichai, Sergey Brin, and Bill Gates. Elon Musk says that he was invited, but unfortunately could not attend. A representative of mine will be there. Curious to, what is more important? What's going on in Elon's life that he can't attend? Is it something to do with Tesla? Is it something to do with his companies, or on a more personal level? Like, that's not something you would just want to miss unless you absolutely had to, is my point. Tesla says that they are about to install their 1 millionth Powerwall. Tesla's global fleet of Powerwalls has a capacity of 6.7 gigawatts of power. That's enough to power the entire country of Singapore. Collectively, they've already delivered the equivalent of 16,317 years of backup power. In option activity today from hedge funds and institutions in Tesla, you have 38 different trades totaling $12.59 million with a positive order value of 58%. Volume today is about 60% calls and 40% puts. So even though now you're red on Tesla, down 0.22%. It's not a bad day as far as option activity. A slow day, but not a bad day. Short interest of free float sits at 2.83%, $25.65 billion sold short in Tesla, totaling 76.78 million shares sold short, and shares out on loan at 15.58 million. You do have 739,000 shares today that are being sold short. Again, you are in the September seasonal weakness. September is by far the worst month for stocks. It's programmed into the algorithms to be a bad month. Like, it's just going to be a bad month. We have to accept that. Okay, it's self-fulfilling. The algorithms control most of the trading volume, and they have a bias to sell. Nothing you can do about it. What you can do is you can look ahead and say, hey, how is October, November, December shaping up for markets? And I personally think it's shaping up to be one of the best 3-month periods we have seen in a very long time. But that's just my personal opinion. And I think that strength leads into 2026 as well. Now, let's get into the broader market economic data today. So we did get a lot of data today. Tomorrow is going to be like the main day of this week, but today was also huge. So you had challenger job cuts that came in at about 86,000. Last month was 62,000. The expectation was 89,000. So what challenger job cuts are is planned layoffs. So we came in lower than expected. Still higher than last month, but lower than expected. Okay, so that's technically a beat. The ADP employment change last month was revised up from 104,000 to 106,000, but we came in at 54,000. The expectation was 65,000. So not terrible, not like things are collapsing out there, but we did miss expectations by about 11,000 jobs versus the expected 65,000 jobs. So this is the private payroll number. It did come in a little bit weaker than expected. The balance of trade came in at negative 78.3 billion. The expectation was negative 75.7 billion. So this does raise your GDP estimates a little bit, okay? Or it should help keep them stable. Q3 GDP, the latest estimate is 3%. That is unchanged from September 2nd. So it didn't technically change anything, but it does change things a little bit. You can see real personal consumption expenditures growth went from 1.7% to 2.1%, And real gross private domestic investment growth went from 5.3% to 6.0%. Okay. So these are the two most important metrics to really evaluate the economy, in my view. Like real personal consumption expenditures. Are people spending more? Is there actual growth in spending? That's important. And are companies investing domestically in America? The answer is yes and yes. From that perspective, the economy is doing just fine. Now, back to the economic calendar, because we did get ISM services PMIs. Now, this is where some of the surprise came in. Your services PMIs, the headline number came in at 52. The expectation was 51. So that was a headline beat. Business activity came in at 55. The expectation was 53. So that was a beat. Employment came in at 46.5. The expectation was 46.2. That was a beat. New orders came in at 56.0. The expectation was 50.1. That's quite a large beat. But look at this. ISM services prices. The most important metric of this, the inflation metric, came in at 69.2. The expectation was 70. Last month, you were at 69.9. Again, you came in at 69.2. So you came in lower than last month and lower than the expectation. For services prices, that is huge. Okay, so we kind of got the best possible scenario here, where business activity came in good, employment came in good, new orders came in good, prices came in low or lower than expected. Best case scenario, I think markets should have actually taken this as really good news today. Okay, I think if it wasn't for the weak September seasonals, this would have been a big positive catalyst for the markets. Okay, and that's where some of the surprise comes in today, because nobody was really expecting that. Okay, now for tomorrow, we have non-farm payrolls expecting about 75,000, and the unemployment rate is expected to rise from 4.2% to 4.3%. I've talked about this before here on this channel over the past week, but again, when I think about this logically, like I have no other insider information. Like I have the same information as you do, but Trump fired the head of the BLS because he said last month's jobs reports were basically inaccurate. Okay. Well, Trump's going to look pretty, stupid, if you will, if we get a really low jobs number tomorrow. Like that is not in his best interest to get a low jobs number. Then who do you blame it on? Right? You can't just blame weakness in the economy on the new guy you appointed, right? Like, it's not going to be a good look if that comes in really bad tomorrow. So I think the odds are we could come in with a higher jobs number, just from that perspective. Now, I do want to tell you, though, and I've talked about this on the channel for years now, the economic data is very delayed. So what we're seeing in real time in the economy is a pretty stable economy, growing a little bit, not really changing. There hasn't been a big change out there, okay? What some of the weakness we're getting reported in the data, like ADP employment change, like Challenger job cuts, some of the overall weakness, in my view, really happened months ago. I think that was with like the tariffs, like May, June. Like got a little bit of weakness, companies got a little hesitant. Now that's over with, right? We're back to really like a status quo economy. Nothing is really changing. So the point is I'm making here, this data is supposed to be for August. It's really for like June, in my view. Well, as we get to like October, November, December, we're going to start getting the actual job numbers for July, August, September, that are going to show the status quo economy that is not weak, not coming in at 19,000 jobs, right? Like not coming in at 10,000 jobs or whatever the last 2 months were, this pretty normal economy. So if I'm correct there, who knows what the number is for tomorrow, but we should see pretty good jobs numbers after this month. Okay, September, October, November, specifically October, November, December, you should see the labor market reflect, 2 months prior, which I think was getting past some of the tariff uncertainties and tariff worries, okay? Because the tariff situation and the trade embargo we had momentarily with China, as I said on this channel at the time, it could have caused a depression. Like literally, like skip recession, go straight to depression, right? That's the kind of scenario we were setting ourselves up with. Like, I honestly thought if the trade embargo were to last like a long time, like months, 6 months, something like that, we would be in a depression, not just a recession, as a lot of people were talking about. Well, that ended so fast that it was a shock event, but it didn't cause people to panic because it didn't last long enough. And that didn't give us a recession. You don't just fall into a recession these days. I want to be very clear about this, so nobody like loses their money, like panics and freaks out, okay? Recessions are caused by shock or panic events. Now, the economy today is so diversified, it takes a lot to get multiple industries and multiple sectors and consumers by and large to panic. It just takes a lot. And that's why we don't go into recessions too often these days, because you don't get that panic very often. Okay. And I don't think we're heading down that road anyways. Yes, I think the jobs data is lagged behind, so we're not getting the best real-time information. But in real time right now in the economy, we are not in a recession. So if my theory is correct, over the next 2 to 3 months, you should see the jobs market, labor market really start to stabilize. To what level that is, I don't know. Probably around 70, 80,000 jobs a month, something like that could be what we deem stabilization. We're not going back to 200,000 plus jobs a month. Okay? We don't need that to keep the labor market okay. That's just my take on this whole thing. So basically, whatever happens in September, if we get markets that come down and people get fearful, I don't think it's going to last. Fed Williams says today the standing repo facility stands ready to help manage liquidity issues if needed. This is something we talked about in the last video, but the reverse repo market basically is collapsing. Okay, it was at about $21 billion yesterday. Let's see where the number is today. Yeah, it's at 17.92 billion. Like, it's really bad, okay? So back in 2019, briefly, this money dried up and nobody showed up to bond auctions. So what happened in the reverse repo market is rates went from like 5% to like 10% overnight. It was a big problem, okay? Well, the Fed had to step in and start providing liquidity, like buying bonds, okay? Well, that's basically what Fed Williams is saying. If liquidity issues arise, the Fed will step in, which would be very positive for stocks. Anytime the Fed buys assets, tends to be a green light for equities. Elon Musk says that Tesla will likely remove the safety driver for its rides in California by the end of this year, so going fully autonomous. Fed Williams says there is still a very high level of reserves in the financial system. Fed Williams says, I don't see abnormal moves in the bond market. Fed Williams says the bond market is more focused on economic fundamentals right now. Fed Williams says the Fed needs to keep the economy on track and allow tariffs to pass through. Fed Williams says, I expect tariff impacts to play out into the middle of next year. I do not think that's the case. I think we're going to have the effects of tariffs, if we have any pass through at all, by the end of this year. I don't think that's a 2026 event. Fed Williams says, my base case is that tariffs will stay in place, but I do consider different scenarios. Fed Williams says core goods inflation has shifted higher on tariffs. Fed Williams says the overall trend in services inflation has been favorable. Again, today we had ISM services prices, which is the inflation component of services that came in lower than expected. Now, I want to be clear, the PMI is the Purchasing Managers Index. So when you see ISM Services PMI, Purchasing Managers Index, it's not hard data. It's a survey of managers in the services sector of large firms that give their expectations about what's to come, right? So the managers in the services sector of this economy don't really think we're going to have an inflation problem versus last month. Their expectations calm down a little bit, which expectations tend to precede reality. If everyone's expecting something, it tends to happen. Vice versa. If they're not expecting it, then it doesn't tend to happen. Williams says, my concern is that the job market cools further than desirable. Again, he's now leaning towards, hey, we should cut rates. So if we look at the odds of rate cuts today, because they move around on a daily basis, the odds are falling a little bit, but it's almost a surefire that we're going to get a rate cut September 17th. There's a 94.4% chance of a rate cut. And it's probably moving around a little bit today, just pricing in what could happen with the jobs report, right? If we get a really hot jobs report tomorrow, like 200,000 jobs or something, the odds of a rate cut are going to fall. But it's going to take more than that even, I think, to not get a rate cut in September. Now, for October, you're pricing in another cut at 54.4% odds. And then for December 10th, it's kind of split between only 2 cuts this year and 3 cuts this year. 2 cuts priced at 45.9%, 3 cuts priced at 41.5%. Based on tomorrow's jobs report, it's really going to either help solidify that third cut this year or push those odds further, lower. Fed Williams says it is clearly the case that downside employment risks have increased. It says President Macron says if Russia continues to reject peace talks, there will be new sanctions in coordination with the U.S. U.S. CEA's Moran says if I were nominated to a Fed term over 4.5 months, I would resign from the CEO or CEA. Fed Williams says tariffs likely to add 1 to 1.5% to inflation this year. Fed Williams says I expect inflation to get back to the Fed's 2% target in 2027. Fed Williams says it will become appropriate to cut rates towards neutral. And Moran says that tariffs aren't inflationary. Mexico is considering new tariffs on countries without a trade deal. This looks like it would include China. Canadian bilateral trade minister says Canada is still hoping for relief from U.S. tariffs on steel, aluminum, and autos, and that work continues. Moran says that Trump's variety of policies is quite disinflationary. Goldman lowers Q3 GDP forecast to 1.6%. Japan's chief trade negotiator says, I am going to have talks with U.S. Treasury Secretary Bessent, U.S. Commerce Secretary Lutnick, and U.S. Trade Representative Greer. Bank of America investors say that the biggest tail risks are trade war triggers global recession at 29%, inflation prevents Fed cuts at 27%, disorderly rise in bond yields at 20%, AI equity bubble at 14%, and dollar debasement at 6%. That's kind of wild. These odds are crazy. A White House official says Trump also emphasized that European leaders must place economic pressure on China for funding Russia's war effort. Most recent AI investor sentiment shows another uptick in bullish or bearish investors. Bullish investors fell from 34.6% to 32.7%, so fell about 2%. Neutral investors fell from 26.0% to 23.9%, and all of the rise came into the bearish category from 39.4% to 43.4%. So people are bearish, very bearish, which is a good thing. If you're a bull, that means the market rally likely has a lot of legs to continue higher. Again, remember that once everyone is bullish, that's when the party tends to stop. If people are bearish, that's actually a good sign. Now, the CNN Fear and Greed Index is neutral at 51, so almost as neutral as it could get. Market momentum is neutral. Stock price strength is greed. Stock price breadth is greed. Put and call options in greed. Market volatility is neutral. Safe haven demand in greed. And junk bond demand is currently in greed as well. If we take a look at the percent of stocks trading above their 50-day moving average, even though we have seen some weakness in recent days and weeks, you're still holding up quite well. 58.77% of stocks are trading above their 50-day moving average. I like to point this out because before you get a larger decline in markets, before you get like a 10+% decline, normally you see the bottom end of the market start to fall out first. And you're really not seeing that right now. Again, I think it's a toss-up. Like, September's probably going to be a bad month, but I think you're looking at some real strength into the end of this year. Hopefully we get some trade deals done. Hopefully the economy stabilizes, inflation continues to make downward progress, and AI is going to be a main focus along with rate cuts into the end of this year. But it's very important. Let me literally overemphasize this again. It doesn't matter if we get rate cuts. It matters why the Fed is cutting rates. If the Fed is cutting rates because the labor market or the economy is presumably weakening too much, that's not a positive rate cut. If we get rate cuts because they want to prevent weakness, that the economy is still doing okay, but they don't want it to get worse, then that is a good rate cut. So not all rate cuts are bullish. I think that's important for people to understand. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already. S&P up 0.43%, NASDAQ up 0.5%, and the Russell is up 0.5% as well. The Russell actually looks really good, like it wants to break out here. The S&P, NASDAQ look, kind of neutral in my view. S&P looks a little bit better than the NASDAQ, but the Russell looks like it wants to make another leg higher. So let me know your thoughts on this down below in the comment section. Come join the trading community if you would like to be a part of the action over there, where we are going out finding small cap AI stocks before Wall Street does. I have invested over $100,000 into one single stock that I think is going to make well over $1 million. That is a hidden gem in my view. But again, if you invest your money blindly because someone else is, you're going to lose all your money. Maybe end up homeless under a bridge, just for dramatic emphasis here. Have a great rest of your day, and I will see you in the next one.